Winston just said to me, Felix, you used to be an investment banker. How many shares does one need to retire on Tesla? And I said, Winston, that's a great idea. I'm going to do one better. I'm also going to give you my full research on Tesla, which you can download at felixfriends.org/Tesla for free. But let me, that was the chair, by the way. Let me walk you through it. So how much, that'll be the first question. How much is Tesla stock going to go up by? We need to answer that so we can actually run through the numbers here. Well, before we look at that, let me give you one further thing. If you want to invest in yourself in terms of knowledge, come and learn how an old banker makes these returns here. In 2022, we did 126% return on capital employed. In 2023, we did 105% return on capital employed. And I quite often do some of these trades on YouTube. Like we did that meta trade here on Thursday. We made $950 in less than an hour. On Friday, we made $560 on the Intel earnings in less than an hour. And the whole thing works around a system, 3 steps that we automate. I'll teach it to you completely for free. Just come and join me on Tuesday evening at felixfriends.org/webinar. And it'll take you about 90 minutes, but I'll give you my whole system because you deserve to understand how it works. You really do. It'll change the way you look at the market. Now, how much will Tesla go up? Well, Kathy Wood says $3,000 plus is her price target, I believe. And then you've got the idiot analysts, the very smart analysts on Wall Street, the ones with the best interest of shareholders at heart, that kind of lot. They're saying $180 to $300 is where we're going to be. But have a look at this. And I think this is much, much, much more interesting. The earnings per share, so the profit per share, this year is expected to be not great. Okay, that's already priced in. Next year, 39%, 21%, 22%, 19%, 33%, 13%, 42%, 10%, and so on. And who's coming up with these? The analysts. These are the same analysts who are saying that, on average, Tesla is going to be at $180. What do we do with analysts? Analysts are like sheep. They don't want to be too far away from the middle of the flock. They don't want to be too far ahead. They don't want to be too far behind. So they keep adjusting their prices around what the stock market's doing. Analysts are freaking useless. So wouldn't pay any attention to them. But if a stock is expected to, let's just say profits, let's just exclude next year because maybe that's already priced in. But from then onwards, on average here, Tesla share price should go up about 20% if profits per share go up 20%, right? Not financial advice, just sort of finger in the air kind of type maths. So then how many shares do I need to retire? Well, the first thing you need to understand, which you may or may not do, is that you need 25 times your expenses to retire on. That's just the golden rule. It means you can spend 4% of it a year. And so say your expenses are $100,000 a year. Now, hopefully by the time you retired, you paid up your mortgages and your car and you no longer got idiotic consumer loans and all that kind of stuff. So you might have narrowed down your expense levels a little bit, which means you need $2.5 million. Now, you might think, that's crazy, Felix, nobody has that money. Well, if you want to retire on $100,000 a year, you need $2.5 million. It's very simple. But shares and investing can get us there much, much more quickly. So how many shares do we need? Well, I use a compound interest calculator. Oh, the excitement. And let's just say you have $1,000 right now in Tesla shares. And by the way, I'm not saying everybody should put all their money in Tesla shares. I will talk about diversification in a moment. And let's say we thought Tesla shares were going to go up 20% a year based on what those miserable analysts come up with as numbers. And you could argue it's going to be a lot more if robo-taxis take off or the robots take off or many of the other things Tesla is working on. They sublet FSD to GM or, that kind of thing. And let's say we do that for 20 years. So let's just say you are at an age where you are going to keep doing that you're happy to wait 20 years. Now, the real question is how much money can you put into this every month? And again, I'll loop back to that in a moment. But let's just say you put $1,000 a month into Tesla. Right now, you've only got $1,000 into it. That, after 20 years, you hit the calculate button and yet I'd already done it. It gives you 3.1 million, which gives plenty if you want to spend 100,000. You've actually got more money than you need, right? Now, can we do this better? So we are basically buying every single month $1,000. And of course, it works with different numbers, like play around with the numbers. So if you're looking at a stock chart here on the left, Tesla, and you're just saying, okay, in May, I buy, $1,000. And then in June, I buy $1,000. And then in July, I buy $1,000 and so on. And you're just buying at these sort of random intervals. Now, I've put on the line on the chart here, this grayish line, which is, or brownish line really, which is the 200-day moving average. And you got that on there. 200-day moving average. And if you're a long-term investor, as a general rule of thumb, it's quite a good idea to buy your stocks that you believe are good below the 200-day moving average line. Why? Because you're just buying them cheaper. So say you were buying down here, you were buying here, you were nibbling here, and you are not, very distinctly not buying in anywhere up here. So what have you done? Well, you've created a share price average that is somewhere down here rather than one that's in the 200s, right? Which is what most people do. Most people have the psychology that they want to buy, oh my God, it's going up, oh my God, now I'm buying, right? And they buy up there. And it's bloody painful, so don't do that. Set yourself a rule that perhaps you only buy the stock below the 200-day moving average line. This is Options Watch if you want to get this on. This is completely free of charge here, what you're seeing. Is that a good idea? I think it's a good idea. I think it's smart. Now, the next thing would be to diversify. And I know you might be a Tesla, lover, and Elon is your god and all that kind of thing. And I get it. The man's incredibly smart, incredible business. Is just, nobody else out there like that. And I do think Tesla is an incredible product, and I think they're just getting started. But weird things happen to good companies at times. And you therefore want to be in a couple of different industries. And I've got a bunch of videos out on that if you want to find some stuff that's a little bit more out of the extraordinary, or you at least want to go into quality stocks of a S&P 500 quality index or something. Don't buy the S&P. It's just you're just going to get average. Who the F wants average, right? Nobody wants average. So, but you want to do a little bit of that just to balance it out a little bit. And and maybe that'll take your numbers down a little bit in terms of returns, but the S&P still went up 12%, and that's including all the rubbish, right? The 450 rubbish stocks. And with that, you still got to $1 million. But say you could do a little bit better. I think with stock picking, 18% is possible. Okay, that's financial advice. I'm not saying it's going to happen definitely, but you still get to a point where you could be quite comfortable. And then if Tesla is or stocks that you consider to be high quality and potentially massive movers, as long as you don't buy them at stupid prices, but you buy them at the smart prices when everybody else hates it, I think it's a good move. And my hope is here that this is just an inspiration to get you to invest more, because it really all comes down to putting that $1,000 a month in there. If you could do more, do more. Do it at the beginning of the month, not the end of the month. Don't wait to see what's left over. Nothing will be left over. You will have shopped, you will have traveled, you will have done all these things, and you deserve to do those things. But by having that goal of what you need to invest, you are just going to push yourself and you're going to bring in more money. And if you want to bring in more money, make your money work harder for you. I do it through trading. I'll teach you that on Tuesday live. Come and join me, felixfranz.org/webinar, and you see exactly how we do the trades that we do and how we automate that and how we, in my view, have lower risk on trading than pretty much anybody else out there, because I run a very, very conservative, boring strategy that makes me a very unboring return. If you enjoyed this video, you know what to do. Share it with a friend or a golden retriever. Thank you for watching. Thank you for tuning in. Winston and Felix here. And Winston just said to me, Felix, you missed the opportunity to buy Tesla. It's over. It's going to keep going up in a vertical line.